Hello, my name is Jingonelli, and today I'm going to be taking you through an example on single entries. We are having Mr. Zira. The name is too long for me, I can't pronounce it well, so I'm going to be saying Mr. Zira. So Mr. Zira, who retired from service in 2021, decided to invest his savings in a retail business. He commenced trading on 1st January 2021 and made his entries in rough exercise books. During the accounting period, Zira made all his sales in cash and determines his selling price by dividing the cost by 80%. Zira appointed you to prepare his statement of comprehensive income for the year ended 31st December, and B, it is requiring you to give the statement of financial position as at that date. So, in order to carry out this task, you got the following information. Accounting records from Mr. Zira. So number one, he paid the cash sales into the bank weekly after providing for a float of 1,000. And still, point one, they're saying the total cash sales amounted to 1,290,900. Then payments during the year made out of cash sales were we're having the salaries, and we're also having the sundry cash payments. Then the remainder of the amount not banked apart from the float represented Mr. Zira's drawings. So a summary of his bank account for the year is as follows. We're having the capital, and also we are having the cash sales paid in. Then we're having the interest-free loan from a friend, and then we are having the withdrawals from the bank account. We're having the fixture and fittings, bank charges, lighting, insurance, rent, payments to the suppliers to be determined. That means we are going to use the creditors control account to determine this. And also we are having, as of 31st December, the following items were outstanding. We're having the closing stock, prepaid rent, creditors for goods, then accrued lighting. Then you are to depreciate the furniture and fittings by 10%. So to do this example here, make sure you have watched the previous videos that I made on single entries. You'll be best fit to attempt this question. So when we are doing single entries, we get to start with step one always talks about the opening capital, but per this example, you can see that Mr. Zira has just started business, meaning we won't have our opening assets or opening liabilities like how you are used to. So meaning you're going to ignore step one. It won't be applicable because even among the required, you're not being told to prepare a statement of affairs. So we are going to start by jotting down or identifying each step and try to put it on paper. So since we are beginning business, you will know that sometimes you can be given bank cash, and you get to start with cash of certain amount and also bank of certain amount, and it adds up to some total amount. So this is how it will, in case you are having bank, because you do realize that in this question they gave you a summary of the bank account and you're having capital. So meaning that when you're presenting capital in the cash book, it will appear on the debit side as you're seeing here. I've done this because some students were asking how come you have included capital in the cash book? And this is the reason why, because that person has even just started business. So when I'm to draft my cash book as step 2, providing you viewed my previous videos, so step 2, I'll give it a suitable title, Zira's 2-column cash book for the year ended. And then I have my debit and credit. I have my details, folio, cash, bank, details, folio, cash, bank. So you can see note number 4, which talks about the capital. So let me take you back. A summary, I've started to start with the cash book, and it's note number 4 which talks about a summary of his bank account for the year. So we are having capital. We're having capital of that amount. We're having capital of 162,500. So you come and drop it there. You're having the capital, and then you're having the cash still, note number 4. And what do they say about the cash? So they're saying cash sales paid in, meaning that these cash sales, they must have amounted from the cash itself. So if I told them to take you back to point number 1, which talks about the total cash sales amounted to 1,290,900. So meaning that from these total sales, they made cash sales. They made a contra entry. They deducted from the cash and put that money in the bank. So that is with point number 2. That's why I made a contra entry here of cash. So meaning that you're going to reduce from the cash. This is the payment side. You're removing from the bank. You're removing from the bank. You're removing from the cash, and then you're taking to the cash. You're removing from the cash, and then you're taking to the bank account. So this is a contra entry. So when I look at note number 4 still, part 3, it talks about a loan. So interest free loan from a friend, which is 60,000. I come and I drop it on the debit side. Then I also go back to point number 1, which talks about he paid cash sales into the bank quickly after providing for a float of 1,000, and they're saying the total cash sales amounted to 1,290,900. So meaning that on the cash book, I'm going to come on the debit side and I put there the 1,290,900. So if I told they were cash purchases, they will appear on the credit side. So moving on, for note number 2, it talks about the payments during the year made out of cash sales. So it means my cash is going to be reducing by salaries of this amount and by sundry cash payments of this amount. So when I go on the cash book, I'll come and I put my salaries and also sundry payments, and they're reducing my cash. And this is what I have done. And then point number 3, because I'll be going to another point, which is the remainder of the amount not banked apart from the float represented Mr. Zira's drawing. So this is where I connect point 3 to point 1, which says he paid cash sales into the bank quickly after providing for a float of 1,000. So this is the treatment for drawings on that point. So for drawings, I'm going to get the cash sales, which were 1,290,900. 900, and then how much did I pay in? So this person paid in cash sales from the bank. You can get to see that cash is reducing and then bank is gaining. So this amount that you paid in, that you deducted from the cash and you took to the bank, you get to subtract it, and then you get a total amount of 164,400. So this is the amount which was not banked. That is the amount which was not banked. So when you come back to note number 3, they say the remainder of the amount not banked apart from the float represented the drawings. So meaning you also have to deduct the 1,000 float. So when you come, before you even remove the float, remember these cash, they said the cash sales had some payments, which when you look at note number 2, the payments made during the year out of the cash sales were 61,000 and 12,500. So meaning you also have to deduct this to get the proper amount that was not banked. So once you add the 2, you get 73,500, and then you're also going to remove the float. So when you come to the drawings, you're going to remove this figure, which is the 164,400 minus the total payments that were removed, which is 73,500 minus the float to get 89,900. So that's how I've gotten my figure for drawings, which is this. So when I look at note number 5, is going to be a copy and paste. Note number 5, which says withdraws from the bank account included. Withdraws from the bank account included fixture and fittings, bank charges, lighting, insurance, rent, and payments to suppliers, and this is to be determined. I told you use the creditors control account to determine this, because it will mean that you got goods once on credit and you had to pay some portion of amount to the suppliers. So as I told you, it's a copy and paste. You get your fixtures, bank charges, lighting, insurance, rent. Now this figure for suppliers, since I already have a worked out solution, it will we can imagine we are not having it, and I'm going to show you how I landed to that figure. So what you do, since I told you, when you look at note number 5, payment to suppliers, we are going to use the creditors control account to determine what was paid to the bank. This is because for a credit to occur, you must have purchased something on credit. So what do we have? When you look at note number 6, right here, they're saying creditors for goods, and this note says as at 31st December the following were outstanding. So you get to see that you're having creditors for the goods. This figure is still outstanding, meaning if it is 31st December, it's going to be our ending figure on that T account of the creditors. So you come and it will be the first thing you drop there. You drop it there because creditor, this is a creditor has a credit account has a normal credit balance brought forward, meaning its balance carried down will be on the debit side. Since we are not having opening balances, and this is our first time to do this, we won't have the opening balance. We shall only be having the ending balance. So after doing that, you will be having a missing figure for purchases. How do you know that I'm having a missing figure for purchases? It's because once you have to relate back to this statement that I made. Once for a credit occur, you must have purchased something on credit, meaning we have to determine what was purchased. But determining what was purchased, borrowing from the question at a particular point was saying from okay, let's go to what the question was saying. it's here. Determines his selling price by dividing cost by 80%. So with that, we can come back here and say, since we have read that, whereby his selling price, he determines his selling price by dividing the cost by 80%. So we say sales is equal to cost divided by the 80%. So cost is going to equal to 80% times the sales. And from the sales, we get to know that sales can be equal to cash sales plus credit sales. And we only have cash sales, so we don't have the credit sales. So meaning our cash sales will equal to the meaning our sales will equal to the cash sales, and our sales are 1,290,900 because our cash sales were of this amount. Can get to see from note number 1, which talks about note number 1 of part 2, this right here. So having done that, you just substitute in from this, you put the cost, and then you'll be like cost is equal to 80% of the the 1,290,900, and then your cost will equate to 1,032,720. So this is your cost. Having determined that, since you know from cost or cost of sales, cost is equal to opening stock plus purchases minus closing stock. But remember, opening stock, you have just started business, so you don't have your opening stock. So opening stock is 0. So cost is equal to 0 plus the purchases minus the closing stock from note number 6, which talks about the closing stock. You can see closing stock is right here, which is 43,500. So then you put the figure for cost, which you got here by this, then is equal to purchases minus this, then you make purchases stay here, then you make the 43,500 cross the equal sign, and it finds there this 1,032,720, and it becomes a positive. So purchases will equal to 1,076,220. So, and it's this figure which you will take to the credit side of the creditor's control account, and after putting it there, obviously you have to determine the balancing figure. So this side is more, you put this side as to equal to this side. So the difference between this and this is this, which is the balancing figure, meaning that this is the amount that you paid to the suppliers, because we know that payment to the suppliers, it gets to be on the debit side of the creditor's control account. So you come and drop the figure there. So the way we have landed to this, if at all you have not watched my previous videos, you may not know why this figure is this side. But if you are told you need to know why, more information why it's supposed to be this side, you can view my previous videos. So meaning this figure, we have now determined it. Now all we need to do is determine which side is more. You realize that this side will be more, so you put this figure here and this figure right here, and then the balancing figure of this credit side will be 1,000, and the balancing figure of this side will be 273,780, and that is the balancing figure on bank. So having done that, you go to step 5. Step 5, which looks at adjusting for expenses, and in our question we had prepaid rent and accrued lighting, and we know prepaid rent is an asset and accrued lighting is a liability. So you are having known that this is an asset and this is a liability, Meaning, since we don't have opening figures, meaning you can start with the closing figure first, meaning the closing figure for an asset, it will be on the credit side, and the closing figure for a liability will be on the debit side as indicated. And these figures, you got them from the question from point 6. So point 6, you go and check. This is where I get this figure, and this side is where I also get this figure. So we can go there and see point number 6. So you can see prepaid rent and accrued lighting as the 31st December, and this is what I have gotten. So having done that, you'll just now go to the bank or go to the cash book, and trace for the figures. How much did you pay for rent during the year, and how much did you pay for the lighting during the year? You realize that these are the figures they paid for during the year. Or you can get them from note number 6. You can get them from this side, or you can get them from the point number 5, which is this. So having done that, you determine the balancing figure. So the balancing figure, realize that this side is more, and the balancing figure will be this, and also here the balancing figure will be this. So meaning that the balancing figure you have gotten, you take to profit and loss, and also this one you take to profit and loss. So I already told you, if I told you I've not watched the previous videos, you may not understand what I've really done here. The deeper details I have tried to compute to learn to these figures, so that I can take them to the profit or loss. So make sure you watch those previous videos. So having done that, you already know that these two under the income statement, which is this, they will go under operating expenses as I've indicated. So point number 7 talks about depreciation, fixtures and fitting of depreciation 10%. So once I come here, say 10% of the cost of the fixtures and fitting, I get it. So having done that, I just come, I had part A, which was having a required, part A of the question was having a required financial statement of comprehensive income, and also the statement of financial position. So now I can start filling in all my figures. So I had sales of this amount. Cost of sales, it starts with opening stock, but I don't have opening stock because we have just started business. We didn't have the figure of opening stock. We had the purchases of this amount. We had closing stock of this amount. So our gross profit will amount to this after subtracting this minus this. So after doing that, operating, we list operating expenses, and we're having the salaries, the sundry expenses, the bank charges, the lighting we have already adjusted, and this is the figure we take. Insurance, then rent we have also adjusted, and this is the figure we take. Then depreciation, since depreciation is an expense, put that figure there. So we add and then we get this. Then after that, gross profit less total operating expenses, and then we get our net profit. After doing that, we go to the last bit, which was part B, which was asking for the statement of financial position. You give it a good title, Zera's statement of financial position at 31st December. Then you say your non-current assets, we had fixtures and fittings cost, which had an accumulated depreciation of this. You get your net book value. Then we had our current assets, we had the closing stock, prepaid rent, bank, cash. By now you know why I'm putting that prepaid rent under current assets, basing from the previous videos. And then your cash, and then after doing that, these are the closing balances. These are the closing balances from the cash book. So you added them, and then you get your total assets. Automatically, this figure should be equal to the total equity and liabilities. If you don't get it when it's not the same, that means at least you have to check somewhere. You would have made an error, but these two must balance. So you go to your capital, you had net profit, you had drawings of this amount, get that. You had a loan of 60, and then you had current liabilities, whereby you had creditors of this amount, accrued lighting. After adjusting, you got this amount. and then after that you add the equity plus the liabilities, and I would get a figure which is equal to what I've gotten to the total asset. So meaning whatever we have gone through is correct. So having done that, you will be done with this number. So thank you so much for watching. Make sure you subscribe to the channel.